Bro, now listen to me very carefully. Is your bank making your money work, or is your money working for your bank? Pay close attention. These days, banks have become incredibly clever, and they do everything they can to influence you. For example, Jordan thought he was capable of figuring everything out. He moved his money into a high yield savings account, paying 4.5% per year. He did a deep analysis. He realized that modern savings accounts barely earn any money anymore. While most people were earning around 0.3% to 0.4% interest, Jordan was earning about 10 times more. And he thought he understood the system. But he was wrong. In fact, he was nowhere close, because his bank was still making far more money from his own money than Jordan was earning. And the most interesting part is this: what the bank was doing with Jordan's money was exactly the same. Jordan was now thinking about doing it himself, and he could have kept all of the money he earned. But first, let's talk about Maya, because this is where the real story begins. Maya had $20,000 in her bank account. That means she was doing exactly what most financial experts recommend. She had built a 6-month emergency fund. She was keeping her money in the bank. She was behaving responsibly. She felt safe. And do you know how much interest her bank paid her at the end of 1 year? Just $76? Yes, you heard that right. $76 after an entire year. About $6 per month. And today, that's not even enough to buy lunch in most cities. Now we get to the really interesting part. That same year, the bank took Maya's $20,000 and generated more than $1,000 in income with it. Maya earned $76. The bank kept the rest, and Maya thanked her bank for it. Bro, think about that sentence again. You let the bank use your $20,000 for an entire year, and in return, you receive $76. Jordan thought he had solved the problem. Maya did not even realize there was a problem, but both of them were wrong, just at different levels. And once you understand what banks are actually doing with your money, you may never look at your savings account the same way again. Most people think their money is just sitting in a vault, as if it is resting in a corner of the bank. That is not what happens. The moment you deposit your money into a bank, that money starts working. But not for you, for the bank. Because the banking business model is very simple. They take your money cheaply, then they lend it to other people at much higher interest rates. The difference is their profit. That's it. And once you realize this, you start to see how the game really works. Like your bank pays you 0.38%. Then it lends the same money to someone else at 7.5% as a car loan, at 12% as a personal loan, at 21% as credit card debt. Same money, different customer, massive profit margin, and the bank keeps most of that difference. Now think about Maya's numbers. Maya earned $76 in 1 year. Her bank earned hundreds of dollars from the same money, maybe even more. And that does not even include fees, overdraft fees, TM fees, account maintenance fees, card transaction revenue, interest earned on pending transactions. The bank makes money from your money in dozens of different ways. So the bank is not holding your money, it is renting it and paying you the lowest amount possible. Now let's go back to Jordan, because Jordan is probably much closer to the average person watching this video. He knew traditional savings accounts were bad, so he opened a high-yield savings account paying 4.5%. He earned about $900 per year on $20,000. A huge difference compared to Maya's $76, and to be honest, this really is a much better option. But Jordan still missed the bigger picture, because the bank was still the middleman. The bank was still managing the money. The bank was still keeping most of the profits. Jordan simply got a slightly larger slice of the pie. And bro, a larger slice is still just a slice. The real question Jordan never asked was this: if the bank is buying treasury bills with my money, why don't I just buy treasury bills directly? And that question changes everything. Now let's look at 3 different scenarios using the same $20,000. The same money, the same amount of time, but completely different results. Scenario 1. Maya's traditional savings account. Maya's account pays 0.38% annually. Total interest earned after 1 year, $76. After taxes, she keeps even less. So the reward for saving money responsibly for an entire year is not even enough for a decent dinner. Scenario 2. Jordan's high-yield savings account. Jordan earns 4.5% annually. After 1 year, he earns about $900. After taxes, he keeps around $650. A major improvement compared to Maya. But there is one important detail. The bank can lower that interest rate whenever it wants. Jordan has no control over that decision. Scenario 3. A treasury bill ETF like SGOV. This fund invests in short-term US Treasury bills. In other words, you're doing exactly what the bank is doing with your money. But this time, there is no bank in the middle. The return goes directly to you. And income from US Treasury securities is generally exempt from state and local taxes. That can provide a meaningful advantage, especially in high-tax states. Now here is the key point. The goal is not to claim that one option is always better than the others. The real point is this. Most people do not even know this option exists. They think there are only two choices, a bad savings account or a slightly better savings account. But there is a third option. Cut the bank out entirely. And once you realize that, your perspective on cash changes. So what does this mean in practice? It is actually very simple. First, you can continue using your checking account for everyday spending. Rent, bills, groceries. That is not the issue. The real issue is your idle cash, your emergency fund, money saved for house down payment. Cash you do not plan to use soon. If that money is sitting in a low-interest account, your bank is probably earning far more from it than you are. That is where the leak is. So what are the alternatives? Treasury bill ETFs like SGOV. You can buy them through any brokerage account just like a stock. They generate monthly income. They are highly liquid. Treasury Direct, the official website of the US Treasury. You buy Treasury bills directly. No middleman, no commission. Money market funds. These are funds that invest in short-term government securities. They offer daily liquidity. Their yields are often very competitive. Now, most people immediately think, but my savings account is FDIC insured. Yes, that is true. But Treasury bills are backed by the same US government. So from a safety standpoint, there is not a huge difference. In some ways, it is even more direct. Another common objection, I need instant access to my money. That is a fair concern. That is why you can keep a certain amount in your checking account for daily needs. But let's be honest, when was the last time you needed $20,000 in 60 seconds? For most people, waiting 1 or 2 business days is not a real problem. And if that delay earns you hundreds of extra dollars each year, it may be well worth it. Now let's zoom out and look at the big picture. Maya did everything she was taught to do. She saved consistently. She kept her money in the bank. She felt safe. Jordan was more informed. He used a high-yield savings account. He earned more. But neither of them asked the same fundamental questions. What is my bank doing with my money? And can I do it myself? The answer is clear. Yes. And once you realize that, you stop thinking like a customer. You start thinking like someone who understands how the system works. And bro, that is where the real mental shift happens. Because the goal is not simply to find a slightly higher interest rate. The goal is to remove as many middlemen as possible and keep a larger share of the return for yourself. This small difference can add thousands of dollars to your net worth over time. And perhaps the most important lesson in this video is this. Most people think their money is working for them. In reality, their money is working for their bank. Once you see that, you cannot unsee it. So the next time you log into your savings account and see a few dollars of interest, do not ask, how much did I earn? Ask, how much did my bank earn using my money? Because sometimes asking the right question can completely change your financial life.